Hi everyone, I'm Kristen Myers, editor-in-chief of ETF.com, here with your market minute for Tuesday, April 8th. I had to double check the date there. So today, we actually have a bit of green, just like my shirt, across the screen as a lot of investors are getting hopeful about potential deals on tariffs. Now, the White House has said that they have had an unprecedented number or a very large number of countries willing to come to the negotiating table around the issue of tariffs. And so investors are really clinging to the hope that perhaps some of the tariffs that we have seen put in place on some of these individualized countries will actually be reduced going forward. We still are going to have to wait for more details on where some of those negotiations go. We've already heard that a deal to at the negotiating table from Vietnam was rejected by the United States. But again, we're going to have to see how things go with some of the US's larger trading partners like the European Union. Here's where we're seeing some green across the screen. It is largely everywhere. So of course, a lot of those broad market funds talking about SPY, VU, DIA are going to be doing well today. But let's take a look at some particular tickers today. So in the green today, currently, we do have GLD, that is gold, back up again. Now, typically gold is a ETF that performs fairly well when the markets are doing pretty badly. But with all of the market turbulence, we have seen really the sinking tide, even sinking the gold ship. It is now back in the green. We're also seeing QQQ, that's Invesco's QQQ Trust. It is a tech heavy ETF and it is up over 2.5% right now so far in the trading session. As again, investors are more willing to pile into these high growth tech names that were really going to be battered and bruised if the United States tipped into any sort of recession. I also want to take a look at short-term treasury bonds. I'm looking right now at SGOV. It is in the green. Now, short-term treasury bonds are a place where a lot of investors had sort of fled to in a hope for kind of having a risk-free attempt at hedging bets against Trump's tariffs. Now, where we are seeing a lot of red, it is going to be in VIXY, VIXY. Now, this is an ETF that actually trades around the VIX, which is frequently known as the fear gauge of the market. Because markets are a little bit more willing to be risk on and are a lot more hopeful about the future, the VIXY is down right now, down over 3.5%, at least right now when it comes to the trading session. We're getting a bit of a breather here today. We're going to have to see how the Trump tariffs continue to go forward this week and if headlines give investors any more reason for worry.